Compiling and supporting payroll-related Fringe-related expenses will be the topic in this Illinois Criminal Justice Information Authority training. One of the first things you need to do is develop a program budget for personnel and Fringe expenses. If your grant will you use to pay for staff salaries, you'll need to estimate personnel costs. The salary not only needs to be known, but also the Fringe benefit rate of all employees who will be paid from the award. When it comes to salaries, the base salary and the method used to arrive at the requested amount should be indicated. This includes any estimates of expected salary increases, and this increase should be explained in the budget narrative for its justification. When it comes to benefits, most benefits are calculated as a percentage of salary and wages and include all benefits, retirement, health and life insurance, Social Security, etc. The goal is to capture Fringe information that is the most predictive of what the benefit rate will be during the budget period. This includes a breakdown of any employee flat rate benefits, health insurance, life insurance, and paid disability. So what are the reportable payroll expenses for a grant, you ask? Payroll expense is comprised of several parts. Gross wages, employer payroll taxes, and benefits make up the three. Gross wages includes Medicare, Social Security, and income taxes withheld from each employee's paycheck. Employer payroll taxes include matching Medicare and Social Security tax up to the Social Security wage cap, as well as other possible taxes, such as state unemployment. Benefits include all the employer-paid portion of health insurance, contributions to retirement plans, and other benefits for the employer's policies and procedures. So let's get into some of the payroll-related definitions. One of the first things I want to do is define gross wages. Gross wages is the amount an employee receives during a pay period, before taxes and other payroll deductions. It is calculated using the hourly rate or salary. Gross wages are the total expenses for a designated pay period. It is comprised of net employee pay and the Medicare, Social Security, state and federal income taxes that are withheld from each paycheck. What's the difference between a payroll versus a non-payroll worker, you ask? A W-2 employee is a payroll employee, and a 1099 is a non-payroll employee. W-2 employees receive employee benefits, covered sick leave, and oftentimes medical benefits, and have taxes withheld, deductions from an employee's gross wages, and these are paid directly to the government. 1099 workers provide their own insurance and account for any sick days themselves. They are paid a flat fee as contractors, contractual employees in the budget. They do not have taxes withheld from their paycheck and do not receive fringe benefits. For a W-2 employee, employers pay half the FICA tax, Medicare and Social Security tax, but that's not the case with the 1099 employee. FICA taxes come out of employees' paychecks, and as an employer, you typically must match what your employees contribute. So what are fringe benefits? Fringe benefits refer to non-wage expenses paid by an employer on behalf of their employees. These common fringe expenses that are reported for a period include insurance premium sharing, employer matching, Social Security and Medicare, retirement systems, and optional retirement programs, matching, as well as assessments for unemployment compensation insurance and workers' compensation insurance. Fringe benefits are budgeted as a percentage of the salaries and wages shown as a separate item in the budget. So how do you account for personnel activity? Well, here's some of the personnel activity reporting that needs to be done. A personnel activity report, or PAR, or time and effort reporting, provide written support that salaries and wages charged to a federal grant. It reflects the distribution of activity of each employee. This must be maintained for all staff members whose compensation is charged in whole or in part directly to awards. PAR for each grant-funded employee must identify grant-funded activity performed. If an employee works on multiple grants, time distinctly spent on each grant must be accounted for on the par. Documentation must be maintained for salary and wages earned. This documentation can include if a timesheet is used, it is signed by the employee and approved by the supervisor. It indicates the total time worked for the period. If an employee works on multiple projects, the total time is shown per project on the timesheet. Where employees are expected to work solely on a single federal award or cost objective, charges for their salaries and wages will be supported by periodic certifications that the employees work solely on that program for the period covered by the certification. These certifications will be prepared at least semi-annually and will be signed by the employee and supervisor official, having first-hand knowledge of the work performed by the employee. So how does ICJIA review personnel on a grant? ICJIA will verify personnel on a grant. During a review, ICJIA will ask for pay check stubs, earnings and leave statements, W-2 forms, letters offering employment with the employer's name and contact information. How does ICJIA verify personnel costs on a grant? Well, as for an example, for an hourly employee, a review is performed of the grant-related employee timesheets. To verify hours worked, there's a comparison of hours recorded on the timesheet, the payroll register. There's a recalculation of the employee's pay based on the hours recorded. There's a comparison of personnel costs to amounts in the general ledger to periodic fiscal reporting. So what are some of the due diligence aspects for salary and fringe expenses? In preparation for a ICJIA PFR review or audit, the salary and fringe benefit amounts will be requested and reviewed. Dates expenses was incurred, employee's name, time and employee worked on the project, salary rate, total wages or salary paid, fringe benefits paid by the employer, net amount of paycheck, the date it was paid. Now, each of the above mentioned items must be accurate and clearly identified. The salary and benefits should be for personnel who work for the grant for the reporting period. The employee's salary and wages for reimbursement should be listed in the grant agreement. Summary reporting or list of documentation should support salary and fringe expenditures or financial statement showing employee salaries and employer paid fringe benefits for the reporting period. So what are the do's and don'ts for salary and fringe cost reporting? When submitting for payment, here are the do's and don'ts. Do report employee gross pay, employee's total wage and salary. Do report all employer paid fringe. There should be a maintenance of reports for employees' time worked in a given period with time and effort reports that certify 100% of an employee's time. Time and effort reporting includes accounting for salary, wages, and benefits, and certifying actual time charges. The don'ts: don't report employees' taxes withheld. Don't report employees' fringe benefits. Since many grants do not allow for employee bonuses and incentives, don't report employee bonuses or other incentives and salary payments in a form other than cash payments, like with gift cards, etc. So one of the key aspects of compiling and supporting fringe and payroll related expenses is communication. The communication should be clear and consistent between the grantee and ICJIA's grant specialist. This is essential during the life cycle of the grant. This includes communicating minor changes to budget details, such as changes in personnel and/or positions funded by the grant. Major changes should also be indicated to budget, such as changes in amount of funding for a dedicated position, which requires a budget revision. I want to thank you for listening to this training on compiling and supporting payroll and fringe related expenses.